What's up guys, today I want to go over the mistakes that new investors and traders make when they come into the stock market. As many of you know, last year was an insane year for the stock market with all-time lows that we haven't seen since 2008, and it showed a lot of potential for growth for new investors to get. And a lot of those new investors and traders that came into the market weren't that knowledgeable about the stock market at first, so that's what we're going to get into. But before we get into anything, if you wouldn't mind supporting me as a new creator by hitting that like button, click subscribe, hit that notification bell so you don't miss any of my new content. I post new videos every Monday, Wednesday, and Friday. Also, if you are new to the channel, I do have a monthly giveaway. It's super easy to sign up. All you have to do is go to the first video of the month. From there, just comment, like, and subscribe, and you are entered. If you want to know more information about it, the details are in the description below. So one of the first mistakes a new trader can make is buying or selling a stock without doing their proper research. Well, to do proper research, you have to do a few things, and one of them is searching for catalysts or news. Now, it's important to keep up on news and catalysts for a stock, especially because it can change the stock price at any given moment. Now, the worst thing you could do is buy a stock blindly without doing any proper research, and the day you buy it, there's some kind of news or catalyst that comes out and the price instantly drops and you lose a bunch of money. And the same goes if you want to sell a stock as well. To avoid this ever happening to you, make sure you check a bunch of credible news sources. This is to ensure that all the information that you're reading is valid and true. But when doing your own research, you have to make sure that the information you're reading isn't skewed and is incorrect. For as many credible sources out there, there are double and triple that amount that are trying to give you fake data about a company. So you need to make sure that all the news and catalysts you just found apply to the other fundamentals I'm going to go over, like chart analysis. Now, analyzing a chart's technicals is probably one of the most important things you can do before investing into a stock. Now, before we get into any technicals, first you're going to need a platform that you can actually check the stock charts on. There are a bunch of them out there that are free and easy to use. Some of the ones I would recommend is TradingView, TD Ameritrade, and Webull. But there are some differences between them. TradingView is just for charts purely and has stock screeners as well, so you can't trade on that platform. Whereas with TD Ameritrade and Webull, you are able to trade on those platforms and see their charts as well. So once you pick a platform that works for you and that you like, then you're going to have to add the technicals for the chart. Now, there are a bunch of different indicators out there that can help make you a better trader, but some of the more important ones are called a simple moving average, a relative strength index, and volume. So how do these indicators help? We're going to start with simple moving average first. So the simple moving average, or SMA for short, calculates the average of a selected range of prices, usually closing prices by the number of periods in that range, and can help determine if an asset price will continue or if it will reverse a bull or bear trend. And on top of that, you can enhance it by using an exponential moving average that is more heavily weighted on recent price action. So pretty much SMA is there to help find a trend to make sure that it's either going in an upwards trend or downwards trend. This could help determine before you buy a stock if it's worth buying right now, or maybe it's going to be in a downtrend for a few days and you're better off buying at the low instead of at the high. The next indicator I want to go over is called the RSI. The relative strength index is there to tell you if a stock is either being overbought or oversold. This can help to make sure you get the best deal possible before you buy it. So for instance, if a stock is trading around an RSI of 30 or below, it means that the stock is oversold and it is a good deal. Whereas if the RSI is at 70 or above, it means it is overbought and it is not a good deal. And if the RSI is right in the middle of 50, it means that it is a fair value. So to get a better picture of a stock being overbought or oversold, it is good to look at a range of at least 6 months out. Now, this kind of goes back to how I referenced before, buying a stock right before it's about to dip or something like that. This will definitely help you predict more if it's going to go down or up before you buy it. Now, the last one I'm going to go over is volume. So volume is more self-explanatory, but every candle you see on a chart has volume to it, which makes a candle go up or down. Now, it's important to add volume because this can show a potential up or downtrend in a stock. So for instance, if a stock has a normal volume of around 1 million shares a day and you happen to see the volume jump to around 10 to 50 million, there's clearly some news and a trend that is about to start. So it's best to look at this because if you're about to buy a stock and you can clearly see that there's a lot of negative volume and it's going into a downtrend, you want to make sure that it recovers first and that you're not buying it at a higher price. Now, the last mistake a new investor can make is not choosing the best platform for them. If you don't have a platform that functions well, this can mean you have issues filling orders and even potential crashes. And a great example for this would be Robinhood. They are free and they make trading look super easy, but in reality, Robinhood has had more crashes than most people could even count. They also have slower fill times for their orders and have terrible customer service. And of course, I have to mention the most recent scandal with Robinhood, which is what happened with GameStop. And this would be Robinhood restricting buying of certain securities like GameStop, so you are only able to sell positions and not buy into new ones. So some alternative platforms that you could use are some, like I mentioned before, like TD Ameritrade and Webull, and even E-Trade. All of the platforms I just mentioned are much more reputable and perform much better than Robinhood could ever. Well guys, thanks for watching. Leave a comment down below on one of the mistakes that you made as a new trader. And before you go, if you haven't already, please support me as a creator by hitting that like button, click subscribe, hit that notification bell so you don't miss any of my new content. Remember, I post new videos every Monday, Wednesday, and Friday. And don't forget about that monthly giveaway. Remember, it's super easy to sign up. Just go to the first video of the month. From there, just comment, like, and subscribe, and you are entered. It is super easy to do. And if you want to know more information about it, just check out the details in the description below.